plus $33,122 profits. That's a trading result from our commodity and futures trading according to COT data and our extreme weather analysis in week number 15. Welcome to Insider Week. In this video, I'm going to show to you our trades of this week and the corresponding results. In our basic COT strategy, we started into the week with a portfolio that consisted of 2 open positions, namely 7 long contracts in cotton and 5 long contracts in coffee. During the week, we closed both of these positions. Let's have a look at them. In coffee, we received a buy signal in the weekly trend direction. Although the seasonal trend is decreasing for the next weeks, the price made new highs, which means that there's relative strength in the market. On the daily chart, you can see that we traded this market twice. At the first time, we were stopped out with a loss of above $10,000. We saw that the trend continues to the upside and we entered this market using our entry pattern. And you can see that that was a very successful trade. With this trade alone, we made a total profit of $39,355. We are happy about this gain and we are pleased to see that our trading plan worked out. If you, as a futures trader or a beginner, want to take the next step and want an approach that is replicable, you can find the link to our website below our YouTube videos and you can fill in your information, submit it, such that we can contact you in order to answer all your remaining questions. Let me now show to you how our coaching program works. For those who have joined our coaching program, the program lasts for 12 months and its plan is as follows. It consists of theory, simulated trading, and real money trading. After working through the theory, you will be ready to practice. Our coaching's focus is practice, as you can see on this roadmap. Theory is good, but success only comes through application. Next market, coffee. In coffee, we received a buy signal in the weekly trend direction. Seasonal trend confirms it by slightly increasing. On the current weekly chart, you can see that the last week was a sell week. We can also see that the price touched the resistance level that we draw in the chart, as you can see. On the daily chart, we waited for a trend reversal. The trend reversal happened and we used the correction to enter the market on Monday. As expected, the price showed an impulse bar to the upside. And then there was another one. After we've seen those impulse bars, we adjusted the stop loss and put it close to our entry level. As you can see afterwards, the price turned to the downside and we were stopped out with a total gain of $656. Now let's have a look at our champion strategy. At the beginning of the week, our portfolio was pretty full. We had 4 positions, namely long contracts in cotton, in the S&P 500, in mini, in lean hogs and in coffee. At the end of this week, we are left with 2 open positions, namely in lean hogs and in heating oil. In this week, we had a net loss in the champion strategy, namely minus $6,903. Let's have a look at the individual trades. In the S&P 500 in mini, we saw that there was a strong seasonal trend. According to the plan, we waited for the correction to appear and used it to enter the market. As you can see, the price turned to the downside and didn't develop as expected. Because of that, we were stopped out with a loss and we don't plan to re-enter this market. The coffee trade in the champion strategy is the same as in the COT strategy. We adjusted our stop loss after we've seen the impulse wave and we were stopped out and our capital was protected. In cotton, the trade was different from the COT strategy. We participated in a loss trade, however, we didn't re-enter it in the champion strategy. In lean hogs, we were triggered according to the plan and the price went to the upside. However, we can see that the price didn't push through the resistance level on the upside. We won't stay in this market for a long time and we want to close the position very soon. In heating oil, we were triggered according to our plan. The price moved in our direction as expected and we adjusted the stop loss. For Monday, we expect the market to open with a gap and if we see that, we want to take profits and close the position. In our trading account, based on weather trading, we are analyzing the fundamental news that affect commodities. In this week, we made a tiny profit of $14. However, we hold two open positions, namely in lean hogs and in rough rice, and both positions are well in the win. The market that produced a little gain was coffee, where we conducted the same trade as in both our other strategies. In lean hogs, we are currently in the market with two long contracts. We won't stay in this trade for a long time, and we want to realize the gains in the next week. In rough rice, we based our trade on the fundamental analysis of rough rice, and we entered this market, and as you can see, the impulse wave was into our direction. More Chinese cities prepare lockdowns. This news may further push our long trade in rough rice. At the end, let's have a look at the CRB index, the commodity price index, as usual. As you can see in this week, the price continued the uptrend, creating a new high. That means for us that we are going to look for new entry possibilities on the long side of the markets. That's it from our side this week. What do you think about our cotton trade where we made over $40,000? Did you also participate in a cotton trade? What's your experience with cotton in general? Please write it in the comments. And if you're already there, give this video a like and subscribe to this channel such that we know that you're interested to see more information which is valuable for your commodity and futures trading. Thank you for your attention and we wish you all many successful trades for the next trading week. And as always, be aware of the risk because risk management is the key to success in trading.